Rich people manage risk. Poor people avoid risk. At first, it sounds counterintuitive. Shouldn't avoiding risk make you safer? The truth is, avoiding risk completely often guarantees slow growth, missed opportunities, and eventual financial struggle. Managing risk intelligently is what creates wealth. Most people are afraid of losing money. They keep cash under the mattress. They avoid investments. They refuse opportunities that seem uncertain. The problem is not fear itself. The problem is letting fear dictate every decision. Risk is unavoidable. Life is full of it. The question is, are you controlling it or letting it control you? Rich people don't blindly avoid risk. They assess, calculate, and control it. For example, they diversify investments. They insure assets against loss. They set up systems to mitigate mistakes. They take small, calculated risks that grow over time. They understand that risk is the price of opportunity. Poor people avoid risk entirely. They stay in safe jobs. They keep money idle in low-interest accounts. They avoid investing in businesses, stocks, or even skills that could improve income. The irony: avoiding risk often creates higher risk over time. Inflation, missed opportunities, and stagnation slowly erode financial security. Managing risk requires strategy, not lack of knowledge. Understand what you're getting into. Preparation. Have a buffer or plan for worst-case scenarios. Diversification. Don't put all eggs in one basket. Small steps, test and scale gradually. Monitoring. Track progress and adjust accordingly. This turns uncertainty into opportunity. Example 1. Investing. Poor mindset: avoid stocks entirely due to fear. Rich mindset: invest steadily, diversify, monitor, and compound returns. Example 2. Entrepreneurship. Poor mindset: avoid starting a business. Rich mindset: launch small, test the market, learn, iterate, scale. Risk is always present. The difference is whether it's destructive or productive. Why do people avoid risk? Fear of failure, fear of judgment, fear of losing money. Rich people acknowledge fear, but don't let it stop them. They turn fear into informed action. Poor people ignore opportunity out of fear. Fear paralyzes them and eventually costs more than the risk they avoided. Educate yourself before committing money. Break big risks into small, manageable steps. Use systems, automation, and insurance to protect yourself. Keep some liquid assets for emergencies. Always calculate potential downside vs upside before acting. The goal is not to eliminate risk. That's impossible. The goal is to manage it wisely. Rich people get rich not by avoiding risk, but by mastering it. Poor people stay stuck because they refuse to engage with risk. If you want to build wealth, start seeing risk as a tool, not a threat. Learn, prepare, and act carefully. Let your calculated risks create compounding growth, opportunity, and freedom. Avoidance kills potential. Management multiplies it. The choice is yours.